your Social Security likely will be double taxed. That's right. Adding insult to injury, not only is it taxed, it's double taxed. Let me explain coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. So, you know, we all love to hate Social Security and it's going to be insolvent and it's taxes and blah, blah, blah. But the truth is, it's an enormously valuable part of your overall financial plan and certainly your retirement game plan, your protection game plan. It's wildly important, okay? So I'm not just taking a cheap shot at Social Security here, but I got in a little, let's just say a little tussle online with a fan of the show on a previous video I did about Social Security. I can get on a soapbox with Social Security, okay? Again, not to paint it in the wrong light. It's wildly valuable, but there are some flaws in the system. Now, I'm not suggesting that I know everything and that I could make a perfect system, by no means, but I certainly can see some of the flaws and I want to educate and point those out. And so I mentioned in a certain video that, yeah, Social Security could double tax and blah, I just hate it, or don't like that feature. And I had a fan of the show say, wait a second, it's not double taxed. And so I didn't, you know, I don't get into those social media little arguments. I don't know who wins. No one wins in those. So I didn't, but I did respond to try to clarify what I meant by double tax. And I realized, well, this isn't wildly obvious to most people. I mean, for most people, they're not even sure it's taxable. And many people don't pay tax on their Social Security. So if it's not taxable, or it hasn't been taxable, how's it even double tax? Well, let me explain. First, is Social Security taxable? Yes, it can be. Your Social Security benefits, when you turn them on, they can be taxable. In fact, I would argue that it's becoming more and more and more and more and more likely that it will be taxable. Why? Okay, so when you start drawing your Social Security benefits, either from disability or whatever, okay, when you start drawing your Social Security benefits, every single year, you have to do a calculation, or your CPA will do a calculation, or your tax software, whenever, will do a tax calculation to look at all of your other income. So wages and interest and capital gains and IRA withdrawals and all of your other income, plus half of the Social Security benefits that you received. And if that formula of all your other income plus half of your Social Security, if for an individual filer, if that equation is above $25,000, then you're going to start paying, you're going to start having to include some of your Social Security as taxable income, okay? It's a sliding scale. So if it's, depending on how high it is, if it's below 25,000, wonderful. None of your Social Security is going to show up on your tax return. And for those individuals, you're not going to pay tax on your Social Security, okay? But if it's above that, then some of your Social Security starts landing as taxable income. And if that equation gets all the way up to being above 34,000, I believe, then most of your Social Security starts becoming taxable, okay? Up to 85% of your Social Security could show up as taxable income. The tax isn't 85%. It's just up to 85% of your Social Security could be included as taxable income. Okay, so that's single filers. What about joint? In a joint scenario, that same formula, all of your other income, IRA withdrawals, pensions, interest, wages, all that sort of stuff, plus half of your Social Security, if that's above 32,000, then your Social Security starts becoming taxable. And if it's above 44,000, then most of it, okay? But with a joint return, it's combined income. So it's not just your income or your interest or your wages and your Social Security, it's you and your spouse. It's both of you combined. All of that has to add up to above 32 and 44. So that's where most people, I would say, fail that test and their Social Security starts becoming taxable. Now, why would I say that's at a federal level? Why would I say that that's becoming more and more and more likely that people are paying tax on their Social Security? Why would I say that? I've been doing this 20 years. That same formula existed 20 years ago. So with all the inflation, as income has gone up and all that sort of stuff, that formula hasn't changed. So yes, every single year we have inflation, and if this formula doesn't change, that means more and more and more and more and more people are failing this test, and their Social Security is showing up as taxable income. So if that's how Social Security is taxed and that's when it's taxed, how could it be double taxed? Well, what funds Social Security in the first place? Like, what goes in to pay for Social Security? How do you receive this benefit? Well, we all have to pay FICA tax. The Federal Insurance Contribution Act, I believe is what it's called. You can impress your friends with that at a cocktail party. Hey, do you know what FICA stands for? That four-letter F word? That's FICA. We all pay it, okay? And we pay FICA at 7.65% of our income up to a certain limit, okay? And I'll break that down, but that 7.65% isn't some arbitrary number. That is your Social Security and Medicare tax that you pay on your wages. 6.2 of that 7.45 is what goes to pay for Social Security. And you pay into that on your wages up to around $147,000, okay? And I don't think that's exactly it, but they change that every single year as well. So you pay 6.2% tax on your wages up to $147,000, and they change that every year. The other 1.45% of FICA goes into into the Medicare system, and you pay that on all your wages, okay? There's no limit on that. So that's where the 7.65 comes from. And then, by the way, your employer also matches that. So your employer pays the same 7.65%, and the breakdown's the same, and on the wage limits, it's the same, okay? Now, that's the tax that goes into paying for your Social Security. So then the question is, well, if that's the tax, if that's what I invest into Social Security, when I invest it, is that tax deductible? No, your FICA is not tax deductible. So, for example, quick and dirty explanation, if your household income is $100,000, okay, then you're gonna pay 7.65% into FICA, all right? So what's that, $7,650. That's how much you're gonna pay into FICA. $6,200 of that goes into Social Security. So that's sucked right out of your paycheck. You have no option. You have no choice unless you can prove somehow you're exempt from Social Security taxes and FICA taxes. So that comes right out of your paycheck. You don't see that money. So then what number shows up on your tax return? The $100,000 of income, the gross income, or the $100,000 minus the 7.65% that you paid in? Notice the full $100,000 shows up on your tax return. Your FICA tax is not a deduction. It's not even an itemized deduction. You have to pay tax on the full amount, even though some of that money went as a separate tax into FICA. So you already pay tax on the money that's going into FICA. And then when you receive the money back to you in Social Security benefits, you are going to have to likely include that money as taxable income. That's what I'm talking about, the double tax. Now, is it a perfect dollar for dollar double tax? No, because that matching contribution by your employer, you're not having to pay tax on that income as your employer pays it, and they get to deduct it. Yep, I get that. And then it's also not a perfect formula because only 85% of your Social Security is taxable income. Okay, yeah, I get that too. And then lastly, it's not a perfect formula because you have no idea typically how much money you're going to receive back from Social Security, because it depends how long you live and your situation. So you don't know, well, how much have I totally paid in versus how much am I going to get? And therefore, am I receiving more than what I paid in? You don't know that along the way. But for at least a chunk of it, or at least, to some degree, there's double taxation going on, which is crazy. That is worse off than a 401k, right? And then the final thing that I would point out as far as how Social Security can be taxable is, or double tax is, it wouldn't be too much of a stretch to say it could even be triple tax. And why? Because when you in retirement or when you're on Social Security, if you fail that test where all of your other income plus half your Social Security, if it's above those limits and Social Security starts being added to your tax return, well, other tax benefits and other tax calculations are based off of your taxable income, your adjusted gross income in retirement. And if Social Security lands there and is part of that calculation, that could weed you out of receiving other tax benefits, i.e., a stimulus payment, okay? Or i.e. some other credits or deductions because your income's now too high. It could also create additional taxes, like additional Medicare taxes, because all of a sudden your Social Security income is on there, therefore you fail the test, your income's too high, now you got to pay additional Medicare tax, as well as additional tax, or excuse me, an additional a higher payment for your Medicare period, what's called IRMA, Income Related Medicare Adjustment Amount, IRMA, where instead of paying the base rate, the base amount for your Medicare Part B and Part D, your income's now too high because you had other income and now you've got to add your Social Security income to it. And when you do that, your income's above the threshold and you've got to pay extra for your Medicare Part B and Part D. So once your Social Security becomes taxable, it now is making you subject to other formulas based off of your adjusted gross income or other income. And that could mean you're not receiving some tax benefits that you otherwise could, and it could mean you're paying more tax than you otherwise would as well. So the big idea here, hopefully that is educational, that's helpful to your perspective. Be planful with your Social Security. If you ever want to check, hey, how much have I even paid into the system? Log in and check out the video that I did recently about the new Social Security statements. Log into your Social Security account, look at your statement. You'll be able to see right there, hey, this is how much you've paid in. This is how much your employer has paid in. And that can actually, again, along with this explanation, give you a frame of reference to say, okay, well, as I start receiving this benefit, how many years do I have to receive before I even, am done getting my own money back in this system? And so anyway, I don't know, maybe that would make you mad or not, I don't know, but you could go check that out. But the point is, be planful with Social Security. This is a very, very big financial tool, very, very important financial instrument. And from a tax standpoint, you need to be mindful. You need comprehensive financial planning to determine the right way to draw Social Security and having the right tax strategy all along the way, leading up to retirement and through retirement. Work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, corehorn.com. That's Corehorn with K. wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.